from my standpoint, I have seen a lot of activity in the last week. I've had four people go into contract. I have two others that are close to going into contract right now, and a lot of calls for pre-approvals. So, there seems to be a lot of activity for a November.
Welcome, everyone, to another episode of What's Happening in the Real Estate Market Weekly with Rich Cercone at Equitable Mortgage, Jamie Barlow, Dave Barlow, Jason Barlow at Sell for 1% Realtors. We are here to bring you the good news of the market. It's on fire. Prices are skyrocketing. Rich,
Interest rates are
what's
through the
going
roof.
on?
No one can afford to buy a house.
Well, we will qualify everything by saying we're recording this on the 7th of November prior to the Fed making their interest rate announcement today. So we don't know what that will hold for us, although it's pretty much expected they're going to lower rates a quarter. And as we have learned, that doesn't necessarily mean that mortgage rates are going down because of that. As a matter of fact, since the Fed lowering on September 17th, we have seen nothing but up with interest rates on the mortgages. And we were in the very low sevens, touching into the fives, and now we are in the high sixes, touching into the sevens on mortgage rates as we speak. In fact, most scenarios, unless you have perfect credit and the right size loan and all that, you are going to be in the 7.0% range on your 30-year
Isn't
fix.
that crazy?
That
I thought we were
Yeah,
supposed to
and
be rooting against the economy. We had
well,
a jobs report of 12,000 jobs created and interest
right.
rates went up.
And the other thing, Dave, is yesterday, or I'm sorry, Tuesday was the election.
Yeah.
And yesterday, the stock market, everyone probably saw what the stock market did yesterday, and it's also rallying again today. But we had a huge stock market rally yesterday. That led to further weakening of interest rates because the market believes that the economy is going to be strong under a Trump presidency with lower regulations and economic stimulus. So they feel that we are going to see further strengthening of the economy. And the 10-year Treasury bond yesterday hit 4.47. Now, the 10-year Treasury is what loosely mortgage rates are based off of. It hit 447. On September 17th, it was 3.62. So we basically have gone up 80 basis points since September 17th on the 10-year Treasury yield, which corresponds with going up about 80 basis points on mortgages, or 80 basis points would be 0.8% interest rate, about almost a 1% interest rate increase in mortgages since then. And again, it's all tied to the economy, the Treasury. I believe the economists don't really feel that that the Fed is committed to lowering interest rates long term. This is more of a get back to even thing that they're doing right now. Best I can tell you from my amateur economist
So
prognostication.
let me ask. I mean, one of the things we talked about in the past is typically when the stock market does good, the bond market doesn't do so good, and vice versa. And one of the things I was thinking about is like, during the run up, with interest rates at 3%, we were seeing new highs being made on a regular basis in the stock market. So they were kind of moving together. So as people pull money out
Right.
of the bond market to jump into the stock market right now because it's on a rally, um, do
Right.
you expect for bonds to continue to go up as they try to entice people to bring money back to the
Well,
bond market?
that what you're saying there, Dave, is very interesting. After the 2008, 2009 crisis, we had tons of Fed stimulus.
Right.
They were doing quantitative easing, they were lowering interest rates, and the bond market was rallying as a result of that. And then additionally, the stock market was rallying because there's the old adage with stockbrokers, you can't fight the Fed.
Right.
And so when they felt that the Fed was going to continue to lower rates and stimulate the economy, so we were seeing stocks go up and bonds improve all at the same time, and it was kind of something that was counterintuitive to what most people think is going to happen. But at this point, we are seeing a little bit more of a historically normal situation where stock market going up and bonds having bad days over that, kind of what you said. So it's a very interesting time. We have a new administration coming in. We'll have to see what 2025 brings us. I think anything's on the table. Mr. Trump is definitely somebody who will get on the Fed and push for lower interest rates. So there's that, and if we don't see inflation, if we see an improved economy and we don't see inflation, and we see people working, then that's going to be helpful to things. So we'll have to just see how things go as we
One
get into 2025 at this point.
one of the things, and again, we've talked about this in the past, that inflation is caused by the government dumping money into the market. And you talked about the quantitative easing. We've seen, $7 trillion get dumped in. I forget what the number is. Jay, you may know as well that like 30% of all the US dollars in the market have been put in the last 3, 4 years, worldwide. And we've talked about, well, if you just stop spending at the government level and quit putting all this money into the market, that should help slow inflation. And so, one of the things that Elon Musk talked about a week or two ago was that, and when asked, well, how much do you think you can cut from the federal government? And he said $2 trillion. And so, something like that, Rich, do you think the government's, stop spending 2 trillion a year will help with inflation?
It certainly would have to. You know, Dave, in my lifetime, I've never seen it happen yet. So I think that we'll have to take a wait and see approach on that. If they really can stop spending money and cut the budget and cut the deficit,
Well, but you haven't had Elon Musk involved, so
you haven't had Elon Musk and you haven't had yeah. So, I mean, what did he do when he bought Twitter? Didn't he cut like 80% of the jobs
yeah,
and the company still runs just fine?
yeah.
So that ought to be interesting, I guess.
Jay,
Yeah,
what
I
are you
mean,
seeing out there in the real estate market?
as long as everyone continues on, and I think that's what we're going to see with the Trump stuff here, is that the market's already reacted very positively, and so it's like I'm seeing it bubble. When I say bubble, I'm seeing a little more showings pop up than what we had last week and the week before. You can kind of feel it coming. It's a little bit early. I was kind of telling all my sellers I would expect after elections we'll have a week or two, 3 week delay, have some writing. Obviously, that's not happening, right now. So it was fairly decisive. That to me, whether you like Trump or don't like Trump, or Kamala don't like her, whoever won for it to be decisive, whether it was Kamala or Trump, I mean, that's kind of what I was rooting for, was that no controversy. Let's get through this. Let's come out the other side and let's try and get back to some kind of normalcy. And so typically Decembers are very strong in election years, but we may see that bump, here before Thanksgiving even. So,
Yeah.
watch it closely. Things are moving along, fairly well. Um, Sellers, have it in the right position, price wise. Make sure you're staying on top of the pile. We have a lot of different strategies we give to our sellers on how to do that. And I'll let Jamie talk about the buyers, but the market really is not, it was never in really bad shape. Showing slowed down, more competition. So you got, showings, less showings spread across more houses, but prices have been up. Things have been okay. And now you get this kind of injection in the marketplace of confidence we'll see what happens. We'll see
Yeah,
where
I
rates go, where
personally,
everything
from
goes.
my standpoint, I have seen a lot of activity in the last week. I've had four people go into contract. I have two others that are close to going into contract right now, and a lot of calls for pre-approvals. So, there seems to be a lot of activity for a November, a typical,
I think
November that you don't see as much.
I think
Yep.
there is a pent up frustration. And as you said, Jay, I don't know with the market if it mattered, if Harris got elected or Trump got elected. There's a resolution and there's a sigh of relief that now it's done. Let's move on. And so the only thing that, I would like to see is if we can get those interest rates back down into the mid sixes or into the low sixes. And then I think that frustration, pent up frustrations will start to move forward. I know, Jamie, in the last week or two, it seems like on the buyer side that things have picked up for you as well.
I think that more people are out there looking to purchase. Yeah, we've been seeing a lot of sign calls on our listings. A lot of buyers out there actively looking to buy. And I have a lot of people that I have searches set up for, haven't heard from in a while, that all of a sudden are kind of coming out of the woodworks and want to go look at some houses. So there definitely is that increase in buyer activity as well. Yeah.
We're going to find out what's next, everybody. New administration coming in. Will we keep Jerome Powell, who is trying to engineer the soft landing, or are we going to move to an inflationist and accelerate this bad boy? Stay tuned. If you like content like this, click the like button, smash the bell, subscribe, leave a comment below. We'll try and answer any questions you guys have. Our information's below, either on the screen, edited by the lovely Jesse, or in the description, like I asked Dad to do. You guys need anything real estate related, give us a call. Appreciate you watching. Have a good day.